Okay, if you're a business owner in the UK, you know time is money, and access to capital, well, that's everything. You're busy, I get it, so let's skip the fluff. This is your quick briefing on a really powerful funding tool that could be exactly what you need for your next big move, the Unsecured Business Loan.
So first things first, let's just get some perspective here. If you're even thinking about external funding, you are definitely not alone. Just look at these numbers from Q2 2024. A whopping 43% of small and medium-sized businesses in the UK were using it. So yeah, what we're talking about today. This isn't some niche idea. It's a major tool that businesses are using to get ahead.
And that leads us to the big question, right? The one that probably keeps you up at night sometimes. You need to invest, you need to grow, maybe just grab an opportunity that's popped up. But how do you do that without gambling with the assets you've worked so hard to build? Your property, your equipment, your van? That's the puzzle we're going to solve right now.
The answer could be a specific kind of loan, the unsecured business loan. I want you to think of this less as just a loan and more as a flexible, powerful tool you can have in your business toolkit.
It really is all in the name. Unsecured just means you don't have to pledge any of your assets as security for the loan. So instead of looking at what you own, lenders are looking at how your business actually performs. They're looking at your credit history, your revenue, your stability. In a way, your track record is the collateral.
So what does this tool actually look like in practice? Well, there are 4 key things to know. First, and this is the big one, no collateral required. Second, the loan amounts are flexible. They're really designed to fit what a small or medium business needs. Third, the repayment terms are usually shorter. Think somewhere in the 2 to 5 year range. And finally, the approval process is just way faster than a traditional loan.
Okay, so we know what it is, but what's in it for you? Let's talk about the real-world advantages for your business, because that's what really matters when you're deciding if this is the right move.
The single biggest advantage, honestly, is peace of mind. Let's be real. If the worst happens and your business hits a rough patch and can't make the payments, your core assets are safe. Your property, your essential equipment, it can't be seized. That just fundamentally de-risks the whole idea of borrowing money to grow.
You know as well as I do, in business, speed is everything. An opportunity won't wait. Because there's no need for these long, drawn-out asset valuations, the whole application and approval process is so much simpler. And that means you can get cash in your account in days, not the weeks or even months it can take with other types of loans. And then there's the flexibility. We are talking total freedom here. Unlike some other types of financing, an unsecured loan doesn't come with a bunch of strings attached. You can use the funds for a new marketing campaign, to snap up a bunch of inventory at a discount, or to hire new staff. You're in control.
Now, this is a big one, especially for founders. Control. When you seek investment, you're often selling a piece of your company, right? Giving up equity. An unsecured loan is just debt. That means you get the cash injection you need while keeping 100% ownership of the business you've poured your heart and soul into.
All right, it all sounds pretty good, right? But look, any smart business decision is made with eyes wide open. We have to look at the other side of the coin. This isn't about finding deal breakers, it's just about doing proper due diligence. So let's talk about the risks. This is the main trade-off. Because the lender is taking on more risk by not having any collateral to fall back on, they charge higher interest rates to compensate for that risk. It makes sense, right? It's the price you pay for the protection and the speed we just talked about.
It's also really important to have realistic expectations about how much you can borrow. Unsecured loans are fantastic for things like funding specific projects or managing cash flow. They generally aren't designed for those massive multi-million-pound projects. For that, you'd probably be looking at a secured loan.
Now, since the lender can't fall back on your assets, what do you think they look at instead? Your business's financial health. And believe me, they will scrutinize it very closely. You absolutely need a strong credit history and solid proof of stability to get approved.
Remember that faster approval feature? Well, it's often paired with a shorter repayment period. While that's great and that you're debt-free sooner, it does mean higher monthly payments. You have to be really confident that your cash flow can handle those bigger, more frequent payments. So let's just pull all of that together and look at it side by side. On one hand, you've got the benefits: zero asset risk, speed, flexibility, and you keep all of your equity. On the other hand, you have the risks: higher interest rates, smaller loan amounts, stricter criteria, and those shorter repayment terms. This is the balance you need to weigh.
Okay, so you've weighed the pros and cons, and you're thinking this might actually work for you. So what's next? What's the actual game plan? Let's break it down into a simple 5-step playbook.
It's actually pretty straightforward. First, get crystal clear on exactly how much you need and what it's for. Step 2, do your homework. Research lenders who work with businesses in your sector. Third, get your ducks in a row. That means bank statements, financial records, business plan, you know the drill. Fourth, when an offer comes in, read every word of it, meticulously review it. And finally, step 5, you accept the terms and get that funding flowing.
We've covered a ton of ground here, and fast. We've defined the tool, we've looked at the good and the bad, and we've laid out the roadmap to get one. So now, it all comes down to the final calculation, making the right strategic call for your business, right here and now.
Look, when you boil it all down, the whole decision comes down to this one trade-off. It's speed and flexibility versus cost and tougher criteria. The only question you have to ask yourself is this: which of those matters more to your business right at this exact moment? Only you know the answer to that. But now, you have the framework to make that call.